Now we are moving to a new discussion today. Actually, this is basically on financial institutions. We are moving to financial institutions. We know in the financial sector there are various subcomponents: money, financial institutions, markets, etc., etc. Now today we are moving to financial institutions. Before that, I have a couple of slides which I need to, make a few slides presentation to give you some idea. You don't have these slides with you, don't worry, nothing, I mean, it's not subject material, it's basically some information. Give me a minute. Okay, now today I want to give you some message on financial and economic news, because as the professionals or students in this subject, we need to have some idea about what's happening in the financial sector in particular, and also on the economy in general, because we cannot operate without this knowledge and information. We should know what's happening on daily basis, what's happening on hourly basis, what's happening in every minute. Today, in the today's context, this information and news is really important. So we like news, okay? We have some interest about news. So everyone of we like news, even information. We like to hear something new. So what sort of information we like, news we like, basically that is the concern. Now, as financial market professionals, what sort of news we should have? Now, news are, in various forms, right? I have extracted some news from the Sinhala papers in Sri Lanka. So there are, some gossips like, this Deyo, Sakyo, whatever, right? These are some interesting news. So if you look at this slide, that makes you really, funny, and, it's hilarious, because those are the news you find in most of the newspapers, especially if you look at the Sinhala newspapers. But for us, what matters is financial news or financial press. Now, since we are in the financial system and the market, and probably some of you may have already started working in the financial market, so we should have some idea about financial press. So my request to you from today, let's make a habit that we look at some financial information around us on a day-to-day basis, on a at least weekly basis, or even hourly basis. Nowadays, we know information is coming to your doorstep, your phone. A lot of information you can, without reaching a newspaper or a website, most of the news you can, have it on your mobile or in your any other device. So it's a matter of that we pay some attention to this news, financial news, or you call it financial press. Now there are some various ways that we can access financial press, which means reporting news pertaining to finance and related matters. When we say related matters, not only the financial sector news, but there are some broad economic news which are very important for us, because financial sector cannot operate without the broader economy. So whatever happens in the broader economy is basically, reflected in the financial market as well. For example, let's say a particular country in a particular day, a country would say, okay, our economic growth has gone down this quarter for this quarter. So on that particular date, you will observe the financial market is responding. Maybe interest rates, maybe the stock market, maybe investors, their activities. You have some indications of this economic incidence on the financial market. So that's what I'm saying. Not only finance and related economic and other macroeconomic developments, you should have some attention to those. Now here in this few slides, we are trying to get you some understanding about what sort of media or basically the channels that we have. My suggestion or my advice for you to have, web-based news hunting. I mean, looking at the web-based news on a frequent basis. Now, web is a very common thing. Everywhere you will see a website is a common thing, and it's easily accessible. As I said, even from your mobile, you can access the web. So these are some websites or international financial web pages that I am presenting you here. Now, these websites, you will have some information about the financial sector. Now, one thing is this Financial Times. It's a international web page where you have financial news. Especially if you look at this, let me take the pen. If you look at this header, you will see a lot of news available on world, US itself, companies, markets, even the opinions. A lot of information is available on this Financial Times. If you, click on this, click on this link, you will link to this financial page as well. I'm just giving you some example. I don't know whether you can see the web page. I just opened it. Since I think I don't share this, you can't see this, but it's a possibility. So you can have various, methods that you can link with the financial press. Now, other one is Wall Street Journal. Wall Street Journal is a very famous website, one of the oldest websites and the papers, a physical paper, where you have a lot of information on the financial market. So in the Wall Street Journal, you will see a lot of information is there. The world news, politics, economy, business, technology, even the markets, a lot of real estate market, everything is there. Reuters. I think Reuters, we are very familiar with the Reuters, not the Reuters that you have as your neighbor. I'm just talking about Reuters news website. So in the Reuters page, you have a lot of information on the markets and prices even. Now, for example, here you will see the market and the stock prices given. And main information is on the web page. And then we have CNBC, the website. There also you have a lot of information on the different news sources. Based on the different news sources, you have this information. One of the famous websites or web pages for the data and the markets is the Bloomberg. So this is the most important data source in modern context, because they have very comprehensive real-time data. Real-time data means what's happening right now, it is reflected. Now, if you look at this banner, you will see the markets, the commodities, stocks, currencies, futures means derivatives, fixed income securities, all this information, even the oil prices, right? Exchange rate, a lot of information is available on the Bloomberg website. Now, sometimes this is a kind of a proprietary database. Sometimes you cannot access all information, but majority of the information is possible. And I think some of you are aware, in your institution probably you might have a Bloomberg terminal. Terminal means you have a Bloomberg, kind of a monitor in your institution where you have Bloomberg database attached to that monitor. So actually some institutions, especially banks, they purchase it because a lot of data is available. So if you have this in your office, you can actually access this Bloomberg terminal. And even not only these websites, like, as I mentioned, Financial Times, Wall Street, Reuters, Bloomberg. Now, most, familiar one for you is the Yahoo. In your Yahoo page, there is a finance section. So click on Yahoo Finance, you will get a lot of market information, industry information, even the oil prices, gold prices, everything is there. And best thing in the Yahoo website is, Yahoo Finance website is, you can download data. You can download most of the prices into Excel files. So that is a very, important facility that you have in the Yahoo page. And then for the interest rates and central bank related news, there is a website called Central Bank News. So this is a very important website, because central banks are time to time they are changing their policies. They change their interest rates, they change their reserve ratios, they change their management information, governors and all that. Everything is published in this central bank website, which is an important website to have central bank information. Now, if you look at this screenshot, you will see here these interest rates are given, right, on that particular date. What are the interest rates in this market? Even Sri Lanka is here. So very important source of data. And in the local context, as I said, I don't recommend Sinhala papers for financial news. Sinhala papers are good for politics and all these Deyosakyan, all these things. But for financial news, I really recommend you look at some English newspapers, right? Now, that is nothing to do with our language, right? I'm just saying you what is the most important source of information. So look at some English newspapers. There are some good newspapers like Daily FT. I'm not promoting for anyone, but I'm just telling you the information. So in Daily FT, you have some important market information, treasury bill, treasury bond market, currency market information, trading data, stock market, analysis, right? Some nice articles on the financial market issues. So I recommend you look at the Daily FT. And also Daily Mirror, that is also a very good English paper where you have some information on the financial market. So you can look at the Daily Mirror as well. Times Online, the Times is also a good paper in terms of information, especially the business sector. If you go to that business sector, you will find a lot of information, valuable information. This is available on online basis also. So you don't need to have physical paper. If you have a website, internet facility, you can just simply look at the financial page of the Times as well. Then we have some important databases or the sources that we can use local. One is the central bank website. So in the central bank website, as financial professionals, you have to start looking at this website. A lot of information, right? So on a weekly basis, monthly basis, daily basis, even in the morning, afternoon basis, you have some important data. Now, if you look at these tabs, you have information on monetary policy, financial system, laws and statistics separately there, and also a column for press. Press means you have a lot of press releases released by the central bank on daily basis. So you have data also. If you click these things, you have a lot of data given. So data can be easily accessed from the central bank website. And there is a thing called e-library. So in this e-library, a lot of historical information is available. You can access or download this information for your requirements. Now, for example, let's say your boss advises you to do some analysis on data. Let's say some macroeconomic analysis. So where do you get data? You can't go around finding data for a longer period. So you can simply look at the central bank website and you can simply download this data for your needs, business analysis or any economic analysis or whatever. So the central bank website, I really recommend you keep a note on this website, cbsl.gov.lk. It's the most comprehensive database we have in the country. And in addition, I have not mentioned here, probably you can look at some of the other website like DCS, Department of Census and Statistics. They publish some information on GDP, some information on inflation, labor statistics, population statistics. So Department of Census and Statistics is also an important database. Now, what I plan to do every week, depending on the time, I would like to spend few minutes before I put up my slides on to discuss the material, subject material. I would like to, have some discussion on the financial news as well. So I would like to, request you to share your knowledge, share your uh, uh, discoveries on the financial sector. So in a particular week, probably we might observe some important developments in a week. So these things, if you can share, let's spend a couple of minutes next week, from next week, at least, couple of people, not everyone, at least 1 to 3 people, to have a discussion on the most important financial news. Okay. And I really recommend another thing. These are, all about the financial sector information. The other thing I recommend is the monetary policy review of the central bank. Now, monetary policy review is back actually every once in 6 weeks. The central bank changes its monetary policy. Monetary policy means the level of interest rates, the direction of interest rates, and all these, the monetary policy related instruments are reviewed once in 6 weeks. So after this review, the central bank probably make some changes to these policies. Sometimes there are no changes, but whatever the decision takes by the central bank is announced to the market. So that announcement is called as the monetary policy review. That is basically coming as a press release. So if you click this press release, you will see in the monetary policy review, it says what really has happened in terms of monetary policy, whether the central bank is changing the monetary policy or not. Likewise, the decision is given. Then the central bank is giving some information on the rationale. Rationale means an analysis is given. Why this has happened? Why this decision is taken? What is the development of that sector? What are the developments in the broader economy? Likewise, some rationale, some discussion is provided in the press release of the monetary policy press release. Then we have another section called the outlook. Outlook means what is the expectation, what is happening in the economy in the next few quarters, what are the views of the central bank in terms of the economy and its direction. So likewise some outlook. So decision, rationale and outlook is basically discussed in this monetary policy review. So I have given you this link. Actually I will share these slides because since I have given some important links, you can basically have a look into these websites and the resources that I have put up here. But I really recommend you start doing it. So as a start, now today is February 20th. In 2 weeks time, we have the next monetary policy review. You call it MPR, monetary policy review, on next March 2021. So on this date at 7:30 a.m., the central bank will announce the monetary policy. So as I said, it's a press release, but not only that, it is basically published in all media, electronic media, print media, social media, even the YouTube, everywhere you will see this press release. Not only that, every press release is followed by a press conference. The governor is attending the press conference and he will, basically give an explanation, answering the questions of the public or the media. Likewise, there's an important, interaction, live interaction through the press conference. So those two things are really important. So I really recommend make it a habit. If you are going to continue your career as a financial professional, if you want to be a very dynamic person, a knowledgeable person, an updated person, you have to do these things. Financial press and the central bank news, especially on the monetary policy review. So as I said, you can start by looking at the monetary policy review from the next one on 4th March 2021. Just simply click on the central bank website, then you will see this monetary policy review, and broadly, as I said, start looking at financial press. So as I mentioned here, we will have a discussion every week depending on time. Then we will have some sharing of the information as well. So it's a kind request, right? That will help us to form a very good knowledge, and as well as we will be sharing our knowledge with the others. I'll share this with you, then you can have these links. Any questions on that? Financial news? Does anyone want to ask any question on that? Or the message is clear? Do I have any questions on the chat box? No? Clear. Right. So please do it, and we'll have some time at the beginning in each session. Okay? Right. Especially, I think I better start from 4th. No, not 4th. That's actually we will meet after your monetary policy announcement. That is on 6th. Right? So 6th March, we will have a detailed discussion on the monetary policy review, because you know what to look at, what is available in the monetary policy press release. So please start looking at, and we will find some time to discuss. Okay, and then let's go to today's discussion. You have the slides with you, central banking slide set. I'm just checking whether I think I have shared, but you should have it, right? Okay, you have. Right, let me put up the slides. As I said, we are starting to discuss financial institutions. Today we start with central banks. Now, what is a financial institution to start with? In an economy, there are various financial institutions. If you look at this simple smart art, you will see large number of institutions are there. There are central banks, finance companies, leasing companies, primary dealers, money brokers, securities firms, insurance companies, pension and provident funds, unit trust, venture capital companies, microfinance companies, etc. Right? You will have more institutions. You are having more institutions. So whatever the institution, the type, if you look at a common definition, we can simply say financial institutions are acting as agents that provides financial services for their customers. So financial institutions are simply an agents providing financial services for their customers. So depending on the type of the business, the type of the financial institution could change or could differ. Now, for example, a bank is a financial institution. They are providing banking service. An insurance company is a financial institution. They are providing insurance services. Likewise, the type of the financial institution depends on his business. The nature of the business will be defining the scope and the activities of the financial institutions. That's one thing that I want to make clear. Second thing, financial institutions generally, they are coming under some sort of regulation by an authority. Regulation means what? At this stage, let's simply understand regulation. It's like controlling or supervising. Now we know a regulator is there on a fan. So when you change it, you control the speed. As a result, you can, achieve whatever the objectives you want. Speed fanning all over, less speed fanning, whatever you need, you can manipulate or manage through the regulator. So in a financial system also we have a regulator or regulation for control and supervision. So this regulation and supervision is important, control and supervision is important because financial institutions are dealing with finance or money. So they are dealing with money generally, or in the majority of cases, this money belongs to the general public. So general public are forming their savings, and these savings are invested or deposited or exchanged in the financial market through institutions, and as a result, the financial sector needs to have some regulation to ensure such money is saved and safe in the economy. Now, for example, if you deposit money in a bank, that money has to be safe. Otherwise, you will lose that money and you will lose your savings, and that's bad for the entire economy. No one will be saving. No one will have a clear understanding about the the savings and the need for savings and how that process in the economy, no one will understand or no one will comply. So in order to form money in the economy, the savings, you should have some control and supervision of the financial institutions. Then people have some trust. That is the important. Why you should have trust this regulation? Because you need to have some trust on the financial system. So that's another thing. Now, if you look at the financial institution in the financial system, as I said, there are large number of institutions. These large number of institutions are providing various services, and there are some subtypes of institutions among these institutions. For example, there are banks, there are non-banks, there are intermediaries, there are non-intermediaries. Likewise, there are various institutions operating in the financial system as different institutions. So we have to look at these key institutions in this program in order to understand their activities and their significance in the financial system. So in this part of the discussion, what we are trying to do here today, we will take out, or we will consider the central bank's role and its nature as a financial institution in the economy. So our focus today is on the central bank. So what is a central bank? By name, the word indicates the bank is central, or the bank is the main bank. The bank is the key bank in the economy. Or sometimes you can call it's the national bank of the economy. So technically, you can call central bank by different names. Some countries, they call it a reserve bank. Some countries, you call it a central bank. Now, for example, in Sri Lanka, you call it a central bank. In Egypt, you call it a central bank. In many other countries, you find it as the central bank. But in some countries, the central bank, the term is not used. Instead, they have different terms to identify the central bank. What are these terms? One is reserve bank. In some countries, you have the reserve bank. For example, in India, you have the reserve bank. In Australia and New Zealand, South Africa, they have a reserve bank. In USA, that's a system of reserve banks. They have, I think, 16 reserve banks. Reserve Bank of Atlanta, Reserve Bank of Kansas City, Reserve Bank of etc. etc. There are 16 reserve banks. Altogether, they form the Central Bank of the United States, which you call as the Fed, Federal Reserve Bank. In some countries, there are various names for the central bank. For example, in Nepal, they call it Nepal Rashtra Bank. In Japan, they call it Bank of Japan. In England, they call it Bank of England. Likewise, depending on country circumstances, they have different ways of defining the central bank. In some countries, you have monetary authorities. Monetary authority means it's like more focusing on the exchange rate issues rather than the central bank broad activities. Now, for example, in Singapore, In Hong Kong, you have a monetary authority. Monetary authority is basically dealing with some sort of limited activities in the economy for their economic performance. So the stability of the economy. We will look at those needs of the central bank later, but there is a clear case that some countries are operating with monetary authority. Now, with that background, let's try to define a central bank. Central bank is defined as an autonomous institution. Autonomous means that is basically free from the government influence. Sometimes you call it independent. Independent institution. Independent means without having the control of the government. Now that independence, the level of independence is, of course, it's subjective. Some banks are very independent. For example, in countries like EU, European Central Bank, their banks are broadly independent. Some countries, they are not that independent, but they are trying to gain independence. There are a lot of achievements and a lot of ways and means that they can use to achieve independence. In some countries, actually, the independence is quite low, and the central bank is basically operating with the influence of other institutions like the government. So, in general, whatever the level of independence, we call it an autonomous independent institution with a specific task in terms of monetary functions. So, their major task is to perform some monetary or financial functions which are affecting the country's money supply, and credit conditions in the economy. So through the money supply and credit in the economy, the central bank can influence the interest rates in the economy. So in that way, we can define that is the institution responsible for money and credit in the economy. So when you say money and credit, theoretically, with money and credit we have, with money and credit we have very important concept related. I think I have discussed even last week when money is involved, when the cost of money, interest rate is involved, that is actually monetary policy. So central bank is a responsible authority to conduct monetary policy. So through that monetary policy, the central bank is trying to achieve its objectives. We will see what are these objectives when we go to the next levels, next slides. If you look at the history of the central bank, in terms of historical evolution, central banks are the most youngest institutions in the world. Most youngest institutions. Most youngest in the sense compared to these banks and similar financial institutions. Central banks, they do not have a significant or a very lengthy history. They have been operating, I think, only for only about 400 years. It's only 4 centuries. But if you compare other trades like legal profession, medicine or medical profession, any other related education profession, likewise, if you look at, they have a very long history, for more than even older than some millennium. But central banks have only a relatively a short history in terms of its evolution. If you look at the early stages of the central banks, they actually evolved from commercial banks. At the beginning, there was no central bank, but there were commercial banks operating. So when commercial banks were expanding their activities, a central bank was established as the coordinating hub for these different banks. So this coordinating hub, you call it a central bank, and they have some specific roles that should be played or that needs to be played in supporting the economy. What are these broad roles? Basically, they have to provide notes, banknotes. Banknotes means currency, right? Currency requirements have to be fulfilled. And then during that period, there was another important requirement, bank to the government. So during this period, they had to act on behalf of banks at the time of establishing central bank, and for a certain period of time, central banks were required to provide banking services to the government. So these are the most important two activities for early central bank. So when the central bank was beginning, the banknote issuance and the acting as a banker to the government. So this is in the early stage where around 15 to 16 period. So centuries, 15 to 16 centuries. So that was the origin of the earlier period of the central bank. So what was the first central bank in the world? It was established in the Europe. Swedish central bank, or you call it Sveriges Riksbank. So Riksbank is the world first central bank established in 1664. I told you this is in 15th or 16th century. So during that period, the world's first central bank was established. And as I said, what was the major task of this bank? Banknote issuance and acting as a banker to the government. Now, if you look at the history, actually, even before this Riksbank, there was another bank. Now, this picture shows the building which we call as Bank of Amsterdam. Bank of Amsterdam means it's actually an early model of a central bank, but it did not proceed. It did not go for a longer period. So that's why we don't talk about it. But this Bank of Amsterdam provided some guidance to establish a central bank, and at the beginning these central banks are actually private entities. As I said, they were acting as commercial banks at the beginning. So as a commercial bank, the first central bank in the world was established, that is Riksbank in 1964, and 30 years later in 1664, and 30 years later in 1694, the world's second central bank was established, that is the Bank of England. So Bank of England means the Central Bank of England. It was established in 1694, and people consider the Bank of England model is the most important model for modern central banking. So people argue the modern central banking was actually came out from the Bank of England, which was established in 1694. So from that point onwards, these two banks are still operating. there are some changes into their policies, the building or the structures, whatever. But broadly, whatever they have, opted as a central bank, they are continuing to perform their duty. Now, currently, there are about 180 central banks in the world, more than 180. Now, with the IMF, there are more than, 180, 90 countries or even 2,200 countries as members of the IMF. Similar to that amount, I think most central banks, most countries, irrespective of whether they are developing or developed, or least developed, poor or rich, whatever, in every country there is a central bank. That's why we have more than 180 central banks operating today. If you look at early central banks, as I said, evolved with several functions. Now we already know they were acting as currency issuers. Currency was the currency issuance was given to the central bank because if many people or even the private entities, if they start issuing currencies, that will create a large mess in the economy. Now, I hope you remember when we were talking about goldsmiths, I told you the goldsmiths started issuing their gold-based currency. And after that, a lot of other people also started issuing such currencies. So when you have multiple types of currencies in the system, various types of currencies in the system, that makes things very complicated. So as a result, what the central banks have done, they have basically restricted the power of issuing currency only to one institution. So that is actually the central bank. So central bank was given the power of issuing money, and they started acting as banker to the government. I already mentioned to you the government banking activities, accounts, borrowings, and all that. Those happen through the central bank, and they are acting as banker to banks. Even the banking sector, they should have a supervisor. So they should have a apex bank or the major bank. So central banks are acting as the major banker to the banks. Lend of last resort means when commercial banks are having some financial pressure or financial issues, when they don't have money, let's say to pay their debt or whatever, for they pay their depositors and all that. So the central banks give uh, loans to such institutions. So that loan, we call it a lender of last resort because the commercial banks are borrowing from the central banks when they are helpless. Actually, when they can't do anything else, they go to the central bank and ask for money. So you call it lender of last resort. And central banks are actually acting as bank supervisors. Now, all the financial institutions, especially banks, are regulated. I told you at the beginning. So central bank is the major regulator for banks. Major, and it's the main regulator. So whether the banks are doing their actions or activities properly, whether they are having a professional conduct, whether they have a good financial position, all these matters are actually examined and checked by the central bank as the bank supervisor. Now these functions actually have been evolved over many centuries. I told you, from 1664, this is 2021, there's a significant time period. So during this time period, all these evolved as different actions. Among these, the last one is very important because during the 20th century, the central banks have evolved with the key function of monetary policy. Oh, central bank is the main monetary policy conductor. We will discuss how this is done and what are the definitions and all that we can discuss. But it has become the main monetary policy supervisor or monetary policy conductor over the time. So this is where we are now. From the beginning, I think here also I mentioned the banknote issuance was one of the key functions of the central bank. So from that beginning in 1664 up to 20th century, now it is 21st, the central banks have acquired different functions. So these different functions in this smart art you can see: issuing money, monetary policy, end of last resort, uh, to the government as well as for commercial banks, and also ensuring a good banking system. All these are central bank actions that have been evolved over time. Now let me ask any question. If you have, you can just raise before I move to the next section. Is anyone having a question? Let me check your chat box. Can't see any questions. Does anyone having any question? No? Can I move forward? Okay. Right. So this is how the central banks have evolved during this period. Okay. And then let's move to the activities and functions of the uh, central banks, modern activities. Now, over time, which means during past many centuries, 3-4 centuries, central banks have been operating with certain objectives. What are these objectives? They are basically targeting on or focusing on two aspects. One is stability, the other one is development. What do you mean by stability? If I draw some two charts, stability indicates you have a behavior like this, although there are some various ups and downs. In general, you are stable. Right? So in an economy, there are some variables that you should have some stability. What are these variables? You should have stability in inflation, prices. You should have stability in exchange rates. You should have stability in asset prices. Right? So there are various variables, interest rates. They should have some stable behavior. In addition, there are some variables in the economy that you need some development, some expansion. Now, one such thing is economic growth. Now, economic growth, we think over time it should be increasing. Maybe earlier it's 4%, 5%, 6%, 7%. Likewise, there should be a jump or expansion in the economy. This aspect we call as development. Now, earlier central banks, they were both having they were having both these objectives, or they were trying to achieve both objectives through their actions, which means earlier central banks, they wanted to have stability in the economy, they wanted to have development in the economy. But practically, you cannot have both. Practically, you cannot have both because these are two different things. Why is that? Now, if you want to maintain stability in the economy, what you should do? You have to have, controls in the economy. Controls in the economy means you have to have interest rate management. You have to have, the exchange rate policies. All these are required. So when you use these instruments, policies, it may not be supporting the growth. For example, if you want to keep inflation low, you raise interest rates as a monetary policy maker. So when you raise interest rates, your inflation will be stable, controlled, but your growth will be declining because now interest rates are high. So there is one extreme. You cannot have stability because when you want to maintain stability, you have to take some policy measures. On the other hand, if you make some policy measures, if you adopt those policy measures, that is not good for development. For example, for stability, you raise interest rates, but that is impacting negatively on growth. When interest rates are kept high, your growth will be low. So likewise, there is a conflict between these two objectives. Conflict is what? You cannot have both stability and development together. You have to give priority to one objective. By definition, by its formation, and by its intended objectives as a responsible institution in the economy, it has to make a clear choice. So modern central banks, they have a clear choice on the function of a modern central bank or a objective of a modern central bank, that is stability. So modern central banks, they mainly look at stability. They have given development objective is given some secondary importance. They're not trying to achieve development because it's not the central bank mandate. In modern world, the central bank's mandate is mainly related to stability, which means a situation like this, where you have economic variables are much stable. They are not having large volatility. So if someone asks, what is the major objective of modern central banks? So the modern central bank's major objective is to maintain stability in the economy. Now the second question might arise, what sort of stability that the central bank can make? So central bank can contribute two types of stability at least, mainly, that is price stability and financial system stability. Price stability, financial system stability. Now, very briefly, how do you define price stability? Probably I'll come back to you and ask for your inputs. Okay, what do you mean by first one, price stability? Does anyone want to answer?
Price stability can be defined as a state where changes in the general level of prices need not be factored into consumption and investment decisions.
Okay, I think what you have mentioned is a very clear, kind of a detailed explanation. Correct. What does that mean? Very simply, you are maintaining. I think someone has given the answer in a very short way. Both are correct. Even your answer and what is written is here is correct. And also another answer I'm getting right now, maintaining general price level without fluctuations. All these are correct. Very simply, price stability means keeping low levels of low and stable levels of inflation. It should be low as well as stable. I think I have some slides over there, a couple of slides. I'll show you some, uh, uh, movements of inflation in a stable price situation. So basically, your inflation is low and stable. That ensures your value of money is secured, or the purchasing power of money is basically secure. And that makes you to make proper decisions, investment decisions, consumption decisions, etc. etc. So this decision making is possible when price stability is there. Possible in the sense you will have a very good environment to make investment decisions or whatever the production decisions, economic decisions, because price stability has some very given some conducive environment for economic stakeholders to perform their actions. Then we will come back to that again. Other one is financial system stability. What do you mean by that? Does anyone have any idea?
Financial markets and the financial institution system is resistant to economic shocks and is to fix smoothly fulfill its basic functions.
Okay, correct. Does anyone having any other answer? Financial system stability. Any other answer? Condition in which economic mechanisms of price formation, funds allocation, risk management operate properly in support of economic growth. Yes, that is a very comprehensive definition. And I see some of you have answered like a safe system to face internal and external shocks. Yes, maintain the financial policies. I think there you need some additional clarification as well. But very simply, as someone has said, a financial system stability means the ability of the financial system to withstand shocks or to face shocks, both internal and external, and to maintain the smooth functioning of the financial system. Right? Clear? I have very concise definitions going forward, but I'm just telling you that's a situation where you have a safe system, as someone has said, that you can face shocks, and those shocks are not impacting the system or the financial system because of the stability or stable condition in the financial system. Right? I think you have a very clear idea on the price stability as well as financial stability. Actually, from in your perspective, you have a very clear idea. So that's really great and enough at this stage. Now let me go back to the slide again. So on that count, these are the two objectives that most modern central banks are trying to achieve in modern era. Earlier, they were trying to achieve not only stability, as I said, development objectives as well. So when development objectives means those central banks were focusing on growth, investment, employment, many things under growth. Now, central banks, their focus has shifted to price stability and financial system stability. Now, keep this in mind very clearly. These two cannot separate out, right? You cannot only focus on price stability and only focus on development. This is the job of the central bank. This is the job of the government. Central bank job is to maintain stability. Government job is to maintain or achieve development. But these two should go in connection. You cannot have a separation between these two. Connection means whenever the central bank achieves this price stability, that will support growth. So modern central banks, they are maintaining price stability, financial system stability, and all these to support growth and development. That's why I said in earlier a couple of minutes ago, I told you central banks are creating a conducive environment, a favorable environment, a fertile environment, a good environment to undertake activities, economic activities to support growth. So it's not the direct job of the central bank. Central bank cannot directly go and create employment. Central bank cannot go and directly create growth because it does not create growth. Growth, employment, all these are created in the real economy by the government activities or the private sector activities. The central bank is providing a good environment or ensuring a better environment. That is the role. Now, how this price stability and financial system stability is achieved by the central bank? For that matter, they have to perform functions. Central banks are performing various functions to achieve these objectives. Now, I have listed down these functions, but I'm not going to detail them because I'll be discussing them under Sri Lankan context. So there I will explain in detail, but I'm just mentioning you here. What are these functions related to the central bank's stability objective? So under price stability, the central bank is basically implementing monetary policy. Central bank is basically implementing exchange rate policy and reserves. Those are mainly for the price stability objective, which means to keep inflation levels stable. In terms of financial system stability, central banks are performing various functions. What are these functions? They're acting as the government's banker's bank. Remember I told you lender of last resort? They regulate the banking industry. They support financial market activities and development. Providing or maintaining safe and efficient payment systems. Payment means how do you make payments and settle it. So all these are performed by the central bank to support financial system stability. And another thing I want to highlight here, price stability and financial stability, they are not two things. In other words, you cannot have one without the other. In order to have price stability, you should have a stable financial system. If financial system is not stable, price stability, if you want to achieve the financial system stability, you should also have the price stability, which means low inflation. So in that nature, these two are actually complementary to each other. Price stability and financial system stability are complementary to each other. To achieve the other, you should have the other one as well. To achieve one, you should have the other as well. Okay. Then let's come back to the Sri Lankan context. Any questions at this moment on this overview? Actually, this is the overview of central banking. Is anyone having idea? Any idea? Any question? No? Can we move forward? Can we move forward? Okay. So Sri Lankan financial system and the central bank. In Sri Lanka's financial system, central bank is the major financial institution. You call it Central Bank of Sri Lanka, or in short we use CBSL. So this is the main financial institution in Sri Lanka. We have large number of institutions. Remember in that first slide, a large number of institutions are there. The central bank is the major financial institution. Now, if you look at the history of central bank in Sri Lanka, like in global context, we saw the global central banking is not that old. It's only 4 centuries compared to other professions in the world. It has only 4 centuries. Similarly, in Sri Lanka, we have a very short history with regard to the Central Bank of Sri Lanka. So this history starts after we gained independence. So after we gained independence, the leaders of Sri Lanka, political leaders, they wanted to have our own financial system, own banking system, own money, own way of introducing money or printing the usage of money. Before that, we had money, we had a kind of a system as a central bank, which came from the British rulers. So it's a kind of a colonial model we had. Before the central bank, we were operating a system called currency board in Sri Lanka. Probably you may have seen some old coins issued in 1910. I recently saw a coin of 1910, 5 cents. So who issued these 5 cents? Not the central bank. It's by the currency. So before 1950s independence, we had currency board system. So after we gained independence, when did we gain independence, by the way? I'm asking this question because some of you are not so sure. When we gained independence? 1940, 48, 50, 70, 72, what, when? 1948. So after we gained independence in 1948, as I said, our Sri Lankan financial system needed a local or domestic financial system created here. So for that matter, we basically wanted to have a central bank as well. So for that matter, we have invited a gentleman called John Exter from the Federal Reserve Bank of USA Federal Reserve System to provide some expert advice to the government. So he came here and studied the system, and he submitted a note, a kind of a report to the government. That report we call as the Exter report. Even today we consider this as an important report, Exter report. So based on this Exter report, the central bank thought of, the government thought of establishing a central bank. Now, based on the report, when you want to establish a central bank, what you need to do is you have to have a approval from the parliament. So for that matter, a new law was drafted. That law, you call it as the Monetary Law Act. So Monetary Law Act of 1949 is the basis for creating a central bank in the country. So even today, up to now, the legal basis for the central bank is the Monetary Law Act. So this was passed in 1949. The act we called as 1949 Monetary Law Act. And based on the Monetary Law Act, the central bank, actually at that time it was called as Central Bank of Ceylon, they commenced their operations in 1950. Exactly 1950, August 28th. So that was the establishment of a central bank in Sri Lanka. So what you see here as the building of the central bank, it's not the original central bank. The original central bank was in some other building, some old historical building right now, Times building. So there we started the central bank, and it was inaugurated by the then finance minister. Later on, he became the president of Sri Lanka, Mr. Jayawardena. He was the finance minister who declared open the central bank. And this expert came from USA, Mr. John Exter, became the first governor of the Central Bank of Sri Lanka. So he is the first governor appointed in 1950, and I think he served for 3 years. So here we have a picture of Mr. John Exter, the first governor of the Central Bank, who served for 3 years and who created the Central Bank for Sri Lanka. Okay, so this is the origin of the central bank 70 years ago. 70 years ago. Now I told you the basis for the central bank, legal basis for the central bank is coming from the Monetary Law Act, MLA, In the Monetary Law Act, the objectives of the central bank is specified. In original MLA, which was passed in 1949, there were four major objectives for the central bank in 1949. These four objectives were related not only to stability, but both stability and development. I told you, no, early central banks, they were basically looking at both stability and the development. So the Central Bank of Sri Lanka also operated with these four objectives for a period of roughly 50 years. But later on, in early 2000, the central bank realized we cannot have both together. You have to give priority to one. So central bank decided to give priority to stability and as a result to support development. So this was done in 2002 by amending the Central Bank Act. Monetary Law Act was amended in 1949 and we defined two key objectives. We call them as co-objectives, two co-objectives, that is economic and price stability and financial system stability. Now these words I have taken exactly from the Monetary Law Act. What are the objectives? Economic and price stability and financial system stability. And if you read this last line also, that is mentioned in the law, with a view to encouraging and promoting development of the productive resources of Sri Lanka. So this is what I have mentioned. The key objectives are related to stability. And by achieving these key objectives, central bank is supporting for what? Development, right? So when the central bank keeps economic and price stability, that supports, economic and price stability and financial system stability, that supports the overall economic performance of the country. So that is very important. So as I said here, I have given you the definitions in relation to these stability aspects. Price stability means low and stable inflation which safeguards the value of money. Financial system stability means ability of the financial system to face the shocks and perform its main functions of resource mobilization, allocation, risk management, settlement, etc., etc., for smooth functioning of the financial system. So this is what we have already discussed as the central bank's key functions. In any central bank, you will see these two objectives mostly, and they are, customized or changed depending on the country's perspective. Now, if you look at in Sri Lanka, here we are only not saying price stability. We also say economic stability. So economic stability means we are trying to maintain a kind of a stable economic condition without having large excess demand or large excess supply. We are trying to make a balance in the economy. So based on the Sri Lanka central bank's practices and procedures, here I am presenting you some of the information related to the structure of the central bank. First, the organization structure of the central bank. Now, in the central bank, the main body that governs the central bank is the monetary board, right? I will go to that slide, then we will have more information. Monetary board is the superior board, right? Like in a private firm, you have a board, no? Similarly, in the central bank, the main control board is the monetary board, and monetary board is basically giving powers to the governor to act as the CEO. It is coming from the MLA by law. So the governor is the chairman and the CEO of the central bank. And then under the governor, there are deputy governors, would be 3 or more. These 3 deputy governors are given various subjects: economic and policy advisory, financial sector, capacity building. So under each of these deputy governors, there are various assistant governors. Under them, there are departments and department heads, and then the staff. So currently in central bank, we have roughly 30 departments working in collaboration to achieve the objectives of the Monetary Law Act, that is price stability and financial system stability. And there are some independent committees as well, like the risk committee, risk management and compliance, audit committee. All these are actually supporting the organizational structure and its objective, conduct, behavior in terms of law. I told you monetary board is the main board or the control board or statutory body. Monetary board is the body corporate, means that is the statutory body. For example, if you want to file a case against the central bank, you can't file or sue the central bank. You have to sue the monetary board because that is the legal body, governing body. So it's responsible for policy decisions regarding the management, operation, administration, etc. So that's how the central bank is basically managed, or how the policies are taken by the central bank. That's purely by the decisions of the monetary board. So monetary board is the main controlling or governing body. It has 5 members. Now these 5 members, actually this is written in the law. We cannot simply say this much, that much, likewise. So this is coming from actually the law. The law has very clearly stated the monetary board should have 5 members. So 5 members, including governor, is the CEO, I told you, and the chairman of the monetary board, serving for near 6 years, appointed by the president on the recommendation of the finance minister. And then we have secretary to the Ministry of Finance. We call him as ex officio because he is coming because of his position. So in Monetary Law Act, it is very clearly mentioned the secretary to the finance is a member of the monetary board. That is actually to make a harmony between the government and the central bank. So government and central bank policy is harmonized, or coordination is established or ensured through the secretary to the Ministry of Finance. So he is basically attending as an ex officio member. And then we have 3 non-executive members. They are coming from the private sector. Now from the private sector, you can pick some, professionals, some intellectuals, some academics who are having some greater knowledge on the financial markets, economics, accounting, banking, etc., etc. Even law. By looking at their expertise, the president can appoint these 3 members to the monetary board, and they are helping the decision making of the central bank. And as I said, they are appointed, the members, except the treasury secretary, appointed by the president on the recommendation of Minister of Finance. And then the functions of the central bank. Now this monetary board, I told you, if I go back to this slide again, The monetary board is giving powers to the governor to conduct actions or perform actions on a day-to-day basis. So on a daily basis, every action is basically implemented or supported, not supported, every action is guided, directed by the governor. So for that matter, as I said, he has a team of deputy governors. Under deputy governors, you have assistant governors and the departments. So departments are getting instructions and directions from the management to perform their functions in line with the objectives. To achieve these objectives, different departments are set up. Now, for example, economic and policy advisory, that cluster is basically into price stability and monetary policy. So they are trying to achieve price stability. Financial sector and regulation supervision cluster, they are trying to achieve financial system stability. So those are the key areas, and those are supported by this capacity building and other, support services. But mainly, these two clusters are trying to achieve the objectives of the central bank. To achieve these objectives, the departments of the central bank have been set up. As I said, those departments are functioning with a view to achieve these objectives. Now, let's see, we have departments, we have objectives, and how we achieve these objectives by these departments. To do that, we have functions. So by performing these functions, the central bank achieves its objectives. Now, from this point onwards, I'm going to discuss these functions one by one. That's why I said, I think earlier we had a list of functions here. Remember? So I didn't discuss them here because I told you I will come back to the Sri Lankan context and I will explain these functions. So here we have these functions. Now, what are the functions of the central bank? Functions can be divided into two major functions. One is co-functions. So co-functions are directly targeting at the objectives of the central bank. We have two objectives: price stability and financial stability. So these co-functions are performed by the central bank in order to achieve these co-objectives. So what are these co-functions? Conducting monetary policy. I'm coming back to these in detail. So central bank is conducting monetary policy, the exchange rate policy, and managing international reserves, which means international assets. These three functions are basically performed to achieve price stability. By performing these functions, the central bank achieves price stability. Then the central bank is having oversight function of the financial system. We call it macroprudential surveillance. Licensing, regulating, supervision of banks and non-selected, I think you have to cut this word, this is wrong, non-bank institutions. Okay? Licensing, regulating and supervising banks and non-bank institutions done by the central. Providing settlement and payment facilities to the economy. Issuing and distribution of currency. Remember, it's one of the key roles of the central bank to issue currency to support economic transactions. So this is done by the central bank. Why? In order to achieve financial system stability, FSS. This is price stability. This is financial system stability. And there are some other functions you cannot exactly classify into one of these, but these are done for the sake of the overall achievement of the objective. For example, the central bank is working on data, economic data and statistics, compile, disseminate economic data and statistics. This is one of the key functions of the central bank. Acting as the banker and financial advisor to the government. By law, in the Monetary Law Act, it has very clearly stated the government should take financial advisors from the central bank for their matters. And the central bank is acting as the banker to the government for their banking operations. So this is another important role played by central bank, which can be classified under core functions because it's needed for the government to operate smoothly and the financial system to operate smoothly. So those are some important functions of the central bank. Overall, we call them as core functions. Now, other than the core functions, the central bank is also performing some additional functions. These additional functions, we call them as agency. Sometimes you call them as auxiliary functions. The word auxiliary means that is not main. That is in support to the main functions. So you call them as agency. So the central bank is an agency. Agency of whom? Of whom? Who's assigning this function to the central bank to act as an agency? The government. So central bank is acting as an agent for the government. So government is basically assigning these functions to the central bank, considering the central bank's expertise, trustworthiness, and its ability to perform these functions. Some of these functions are directly coming from the Monetary Law Act. Some of these functions are coming from different acts, not only from the Monetary Law Act. For example, central bank is the agency for public debt. Public debt means the government debt. So central bank is managing this government debt as per the Monetary Law Act. Central bank is also doing foreign exchange management, which means in order to support the country's need of foreign exchange, the central bank is providing the facilitation as the agency. Management of the EPF, I think you may have heard or you have the connection with the EPF. It's the largest fund in Sri Lanka, superannuation fund. Superannuation fund means retirement fund. So that fund is with the central bank. Central bank is managing this fund. It's a huge amount of money. Central bank is supporting for managing this fund. Facilitating financial inclusion, which means central bank is basically handling the regional development activities for the support of the economy. This is one of the important functions performed by the central bank. Financial intelligence, which means in order to prevent money laundering and terrorist financing activities. So government has given this role to the CBSL because CBSL has some expertise into this area. So the government unit of financial intelligence is basically housed in the central bank, and also staff is providing services to this FIU, financial intelligence. So all in all, the central bank objectives, twofold objectives are achieved by performing these core functions. Those are the main functions. Every aspect of the central bank, every task of the central bank is driving towards these core objectives and core functions. And in addition, central bank is supporting the government by way of performing these agency functions, or we call them as auxiliary functions in support of the government. Okay? Right. Now, this point onwards, I'm going to discuss each and every function of the central bank in a little detailed manner. I'm not going to, too much details, because under central banking in the next level, you will be discussing these things in detail. You have a very thorough discussion under the subject D09. D09 means central banking in your next level. So I'm not going to that details, but at least we should have a basic understanding about the central bank functions and how they are affecting the financial system and what is the relevance with the financial system. That we will do. For that matter, each and every function I'm going to discuss in a simple manner, but in a little detailed manner. Okay, that I plan to start next week to do it. Probably we can wind up the session today, because if I start discussing monetary policy, I should have some time. But I want to mention you what I have said at the beginning, this financial press. So please start looking at news around you. That is basically news on the financial system. So as I said, I'm trying to get some time in our discussion to review some of these financial news. Then I would know whether you have some interest or some idea about the developments and information in the financial system. And then especially I told you, don't forget the date, 4th March at 7:30 a.m. Just look at the monetary policy review, because I'm going to discuss that monetary policy review in the class. I think that is on 6th March that we are meeting. So two things that you have to do: start looking at financial news from today onwards. Look at the monetary policy press release on 4th March 2021. With that, we will discuss the news and the monetary policy. Any questions before we wind up? All good? Can we stop here? Okay. Right. So let's meet next week, same time, in the same way. Have a good weekend and also stay safe. I'll meet you next week. Thank you. Good night.
Thank you, sir.